Yesterday, the Russian government introduced a temporary ban on exports of gasoline and diesel to stabilize domestic fuel prices. As a result, global oil prices climbed by almost $2 per barrel to settle at around $94 per barrel. Now the market seems to have got stuck in a sideways range, as investors are mulling over two significant fundamental factors. They are pondering how Russia's decision will affect the global structure of supply and demand and how long the ban will be in effect. Speaking of fuel supply, it will obviously decline. As for the second point, the Energy Ministry said that the ban is indefinite and will be lifted only after the market feels the effect. So it's still unclear whether this measure will be of a long-term or short-term nature. While the market is looking for answers to these questions, oil will probably stay steady in the face of uncertainty. Later on, prices are expected to extend gains. The only question is the scale of the further rally. If the uptrend remains intact, the asset will most likely return to its local high. Likewise, gold is not in a hurry to lose ground. The decision of the Bank of England to leave interest rates unchanged supported the yellow metal. At the same time, it seems that the fundamental situation in the market is now gradually changing. The key central banks are beginning to ease their policy stance and apparently preparing for interest rate cuts. Amid such expectations, gold has a chance of rising further. A gradual shift in a monetary policy direction at least makes a decline to $1,900 per 3 ounce highly unlikely. To extend gains, the quote needs to consolidate above $1,930 per 3 ounce. If the quote fixes below the 1,920 mark, so the metal is expected to resume losses. Now let's get back to Russia's ban on fuel exports. This decision backed up the ruble, which saw steep gains. However, the effect was short-lived, with the quotes coming back to 96 rubles per dollar. After all, the measure does not directly affect the ruble. Moreover, it rather harms the ruble as it may lead to a reduction in the country's current account surplus. Therefore, the dollar-ruble pair will likely keep drifting at around 96 rubles per dollar in the range of 95.50 to 97.40. Besides, this ban could have a negative impact on domestic oil companies, which make up the bulk of the Russian stock market. In this regard, the index extended weakness approaching the 3,000 mark. Judging by the market dynamics, it's likely to fall below this level as early as the next week. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.